Winter's here, so are the buyers. Hot Property by AARON McDONALD. With the shortest day of the year just past, we're well and truly into winter. Not that I needed a calendar to tell me that. My real sign? The kids' clothes at the end of the school day. Wet shoes, muddy knees, and the odd sock mysteriously missing in action. That plus the shoes off signs multiplying at front doors, and those trusty old towels doing service as welcome mat backups. Yep, we're deep into winter, the time of year when things traditionally cool off in real estate too. But what we're seeing is more buyers fighting over fewer homes. I've always said double digits, 10, is the magic number when it comes to open home attendance. It usually tells you a campaign's healthy and has momentum. Lately, though, many of our opens are smashing that figure. We're seeing 15, 20, even 25 groups through, especially for well-presented homes in core areas like Donvale, Eltham, Warrandyte and Wonga Park. It's not just a hunch either. The data shows property levels are still well below average for this time of year. As we approach what is expected to be another rate cut in July, following a couple of banks that have already trimmed theirs, buyers are just warming up. Around the grounds. A lesson in auction agility fuels the difference of only $500. If there's one thing this market is teaching us right now, it's that flexibility wins. Recently, we handled a sale that demonstrated the power of a well-timed pivot and the razor-thin difference between buying and missing out. The property, a solid 1970s brick veneer at 28 Heather Grove, Lower Templestowe. The plan? A standard auction campaign with a 4-week lead-in and a set date. The twist? 2 serious buyers couldn't attend the scheduled auction, and both were pushing to buy the property prior to the auction. Rather than risking a drawn-out negotiation or losing buyer urgency, we made the call and brought the auction forward by a full week. We reworked the marketing, notified all interested parties, and ensured that all bidders were registered and ready. That quick decision paid off. In front of a huge crowd on a fresh Melbourne morning, the opening bid was $950,000, quickly beaten and hitting the reserve of $1,100,000 after 14 minutes of strong bidding. It sold for $1,300,500, $500 more than the last bid. That's right, it came down to just $500 between the final 2 bids. Easily the best $500 that family will ever spend, not even a month's worth of fuel. What's hot? End of financial year. Rates and a quick finance check-in. As we edge closer to the end of the financial year, the conversations I'm having at open homes, school drop-offs and Saturday sports are shifting slightly. Yes, there's still footy scores and winter flu chat, but now there's a new topic popping up: council rates and land tax. It's that time when the envelope from council lands in the letterbox, and for many it's the first real look at their capital improved value in a while. A great time to ask, am I paying too much? Is my property being valued correctly? It's also the perfect reminder to take a wider look at your finances. Whether it's your home loan, investment property portfolio, or your overall financial position, the end of financial year period is a great time to sit down with your broker or accountant, or find a great local one, and ask a few smart questions. Could my loan structure be working harder for me? Am I eligible for a better rate? Is it time to look at refinancing? Can I get into the market? Fast facts. What's a Section 27? If you're selling, you might hear your agent or conveyancer talk about a Section 27. Here's what that means. It allows early release of the deposit. Under Section 27 of the Estate Agents Act 1980, a seller, vendor, can request the early release of the deposit money paid by the buyer before settlement. How it works. Your conveyancer or solicitor prepares a Section 27 statement that outlines your mortgage details and confirms there is sufficient equity in the property. The buyer's legal rep then has 28 days to object, but if they don't, or if they consent sooner, the funds can be released. This can be handy if you're buying another property and want early access to funds, or just prefer not to wait until settlement day. Early release isn't automatic. It depends on the buyer's approval and your mortgage position being clear. If there are issues, like a high mortgage balance or missing documents, the buyer can validly object. What's next? Are we getting a pay rise? Well, kind of. According to Westpac, the financial markets are putting a 97% chance on Reserve Bank Governor Michelle Bullock giving us another rate cut when the RBA meets on July 7 to 8. If she does, we're looking at the third rate cut this year, dropping the cash rate to 3.6% from the current 3.85%. Now, I know it's not quite the same as finding a $100 note in your winter jacket pocket, but if you've got a mortgage, this kind of news may feel like a little pay rise. So whether you're looking to make a move or just want to make sure your bank isn't taking more than its fair share, now's a great time to check in. Thanks for reading. About Aaron. Aaron McDonald is a local to Warrandyte, a husband and father to 3 little ones. He is partner and auctioneer at Fletcher's Real Estate and a lover of local property.